Well, Fed officials are going to be meeting in Washington today. That's what we keep talking about all morning. We get the announcement at 2:15, issuing their statement that is just around the corner. We want to get someone's take on what all this means. Dean Maki is the chief strategist economist over at Barclays. Dean, we're glad you're with us. Try to make sense of it for us. What do you expect coming from the Fed at 2:15 today?
Well, what we expect the Fed to do is to really state that they're willing to do what's needed to support the recovery, but not to take any specific action today. We don't think they're ready to do QE3 yet, and if they do some of the actions that have been discussed, which stop far short of a major asset purchase program, I think the question will be raised what those programs would actually accomplish. So we think the Fed would like to buy some time here and watch the data over the next few months and then act if they need to.
Now, I got to ask you, you've gone on record saying that you think if sentiment gets worse, the Fed might have to act sooner. I mean, you think about the sentiment of the past couple of weeks, certainly yesterday, it's pretty bad.
It is, and certainly it's a little better today, but we've had a sharp downturn the last few days. That certainly raises the probability that the Fed feels it needs to do something. And so we have a little less conviction than we would have, say, when the payroll numbers came out Friday morning. But still, our base case is that at the end of the day, they decide there isn't anything particularly effective to do right now. They'll do much more later if they need to.
All right, Dean, so when the Fed releases a statement, it's always about reading between the lines. You got to take a close look at the language. What specific wording are you sort of looking for? What will be a signal to you that they're willing to do what is needed to support the economy?
Well, we think in the last part of the statement where they say something to the equivalent of we'll do what's needed for price stability and full employment, we think they strengthen that language just a bit, and just to say that they're ready to act as needed, something along those lines.
Let's say they strengthen the language. What do they then do to put that language into action?
We think that the economic data will be improving over the next few months, so we don't expect another major asset purchase program from the Fed. But really, in our view, that's what the Fed will do as a full-blown policy if they decide to take significant action in the future.
And Dean, I'm going to ask you a question here that may seem a little off the beaten path, but we were talking earlier to one of our colleagues, Heath Prabhakar, about retail stocks and the correlation to in spending and correlation to Dow performance. You know, when we do look at stocks falling as much as they have in the last couple of weeks, many markets now officially in bear territory. When do you start to factor that into your GDP forecast? When do you start to actually see the stock market falling so much that it sort of becomes a self-fulfilling prophecy in terms of the economy?
Well, there's two things that can happen. If the stock market decline is sustained over time and lasts for a number of quarters going forward, then that acts through the wealth effect to reduce consumer spending. But that takes quite a while to play out. Well, the alternative way it could affect things is if the drop is so severe that it really just causes households to pull back, causes sentiment to fall in such a way that consumers start putting off those discretionary purchases. So that's something we're going to have to monitor in light of the declines we've been seeing the past few days.
Dean, we're going to have to say goodbye, but in the last 20 seconds, can you tell us, if you could please, which is more important, the deficit or jobs?
I think in the very near term, unquestionably, jobs are what the focus should be on. In the longer term, the deficit is quite important as well, but in the very near term, I think unemployment is a major problem.
Okay, Dean Maki, chief economist at Barclays, thank you, sir, for joining us.
Thank you.